Amazon stock is up 65% year to date. For everybody who loves Tesla and Nvidia, you're probably laughing at that saying, what a joke of a company. Guys, Amazon, it's an interesting company. It's a different beast. I just read a book called Where the Money Is At, or what was it by, we're interviewing the writer, Mr. Cecil, this week on Thursday, Adam Cecil this week on Thursday. He makes a big case for Amazon and how their cash flow and profitability doesn't really show the true value of the business. I can understand that to a certain element, but of course, maybe I'm just cynical. In this video, guys, whether you're a beginning investor or an advanced investor, there'll be something here for everybody across the spectrum. So watch the whole video. If you're more of a beginner and it confuses you, that's okay. I was confused. All the 200,000 people who subscribe to our channel at some point in their life were confused. Stick with it. Watch more videos and understand. We're going to go over some high-level numbers on Amazon. We're going to go into our community and see what our community members have said about bull and bear cases about Amazon. We're going to give away a t-shirt to the best community member in the engagement. We're going to go over some analyst estimates. We're going to go over our 8 pillars on Amazon, and we're going to finish it off with the most important question using our stock analyzer tool. What price should we pay for Amazon? So let's take a look here. Amazon is a $1.44 trillion company. It means if you want to buy market cap, if you want to buy every single share outstanding, you pay $1.44 trillion. All-time high, July of 2021, 188. So this super grower over 2 years and is still 20% below its all-time high.
Still not a shower.
Still not a shower right now. It's just, wait, did we screw that one up? Is it a shower or a grower?
Grower, not a shower.
It's not a grower though, because it hasn't grown.
It's not a shower either.
All right, that derailed very quickly. If somebody in the comments,
I love it.
So, guys, the current PE is 110. Now, Amazon's PE has been insane since 1997. But a lot of people, the Amazon bulls, will say it's been reinvesting its money back into the business. And Cecil's argument is that the value 3.0 kind of companies, these are companies that have a different way of generating business, should be valued differently, and their marketing and research and development costs should be capitalized. I understand that. But at some point, at $538 billion, show me the money.
Yeah.
You know, I have other viewers who say to me, Paul, you don't get it. This is not the real gross margin for Amazon. It's not 14%. At $500 some billion, at what point are you going to start showing me the money? Yeah. And you can't capitalize all advertising and all R&D. There's some sort of maintenance cost to those things. Look at Coca-Cola. They advertise just to keep their brand alive. It doesn't mean it's a capitalized cost. What I mean by capitalized cost is it's an investment in themselves. I get the argument about it. Trust me. I have a lot of real estate and I invest a lot. I never have cash flow because I reinvest every dollar of cash flow and some back into our properties to raise rents. I understand it completely. But still, I don't understand when people say advertising is investment, I get it, but I also sit there and say, but advertising is just a cost of doing business. Anything above and beyond, there's still a portion of the advertising cost to pull back.
Yeah.
So that's where I get confused here. Return on invested capital over 5 years has been 8.2%. Now, with that said, this to me helps make the argument that they're investing a lot and it's showing the numbers being very low. Because you can't grow a company like they have without naturally, without some sort of good return on the money invested in the business. But what's a reasonable amount? What's a reasonable profit? So let's go to something here real quick that I want to show you. The cash flow statement. Actually, you know what? Let's go to the income statement. And let's go to their total operating income. Their operating income of $17.7 billion. It's been growing all along the way. Forget about COVID year where we had an obscure random year of huge numbers. So it's been growing. But guys, 1.7 trillion for 17 billion operating, that's 100 to 1. At some point, even if you take their operating expenses and so look at R&D here, $65 billion. Cut it in half. So call it 32 billion. Okay, so we're going to add 32 billion to this. Takes it to 50. And then take SG&A expenses. Sales general and administrative expenses. Let's take $20 billion out of that. Add 20 to this, you're at $70 billion in operating income. Okay, now we're at 20 times, 25 times, and a $1.7 trillion market cap. Okay, I can understand that. But again, I'm making these assumptions here, and that's the whole thesis behind the bullish people on Amazon. So what are our community members saying about Amazon?
Let's see here. Starting with, bull speculative cases, what Chris says. They could increase their annual memberships and no one would cancel. That's a very good point. They could normalize CapEx. Between 2009 and 2012, they increased CapEx 10 times. By 2015, they saw free cash flow surge. If they do the same track as spending cycle of from 2009 to 2012, then we could see 2024 being a good year for Amazon. I guess we'd have to go and look and see what they did in there. Bear cases. They may never normalize capital expenditures to maximize their profits. They've been increasing CapEx since 2007. Amazon has increasingly large share of the retail space. It's not unrealistic for them to raise costs of their annual memberships. That's true.
They have 50%, I think, of all online retail sales.
Yeah. There was a part in here. Where did Dalton post? Of all big tech companies, Amazon is trusted by 73% of American consumers, only behind Microsoft of 75%. So I think one of the biggest things they have going for them is who's getting rid of them. And people are not getting rid of them when they increase. Think about it. Netflix increases prices, loses users. Disney Plus, any company subscribership increases prices, they lose. These guys don't.
So in the book Where the Money Is by Adam Cecil, he makes some very valid points. One of which is Jeff Bezos has been very pro-investor for a long time. Yeah. He doesn't take any, he tries to very much limit the stock options. He has, majority of his wealth comes from that. I think it was something like $1.7 million was his compensation in the year that it was reported, and 1.6 of it was for security detail. Oh. Yeah. Guys, Jeff Bezos has done an amazing job being a long-term thinker. And this very well could be a blind spot for me, not being in the business and not understanding how the growth is happening there to then lead to the bottom line. Because I just look at it going, at some point you got to start showing the money. When are you going to do that? And a lot of times people will overpay for the hope and dreams of what could happen. What else you got, Mo? Anything else?
Somebody wrote in here.
A lot of activity.
A bull and bear case of an Amazon Web Services spinoff. So
I actually think it's a bull case.
Yeah.
The idea there is
it would unleash some value.
The idea would be this very high profitable, high revenue business could be spun off in its own separate company and get a lot of extra value out of there, as opposed to being thrown in with a bunch of companies that are low, that are not doing as well margin wise.
A good question. How likely is that the FTC would break up Amazon?
Well, aren't they filing a lawsuit?
I think they are. Let's see.
We've seen that before.
Yeah, I mean, this has been a part of the conversation for a long time. How can Amazon be a $1 trillion company and make almost no profit on the e-commerce side?
So that's the issue I have. And D-Money, thank you for bringing that up. I know a lot of people watching this who are pro-Amazon will say they're investing in the future, but at some point, it's got to give. At some point, you got to say, all right, we're good. Let's start showing some more profit. I don't know. Maybe I could very well be wrong, and that could be why I miss Amazon, and I'm okay missing Amazon for that reason. It'll be a good learning experience, and I also wonder, in Adam's book, and we're going to talk to him on Thursday, in Adam's book, I've thought to myself, if it wasn't such a big bull market for tech, would we even be having this conversation now? Maybe not. Maybe it'd have been the Amazon of 2001 that fell 95%. And it's only because we had this massive bull market led by quantitative easing and low interest rates that allowed Amazon to get away with this for so long. I mean, look at the Uber CEO. After 2021 or whatever, he came out and said, listen, cash flow is king now. We got to start showing the cash flow. The market shifted.
Yeah.
I don't know. He might be right, and Amazon might just be like, we don't care, and I'd love it. But at the end of the day, if Amazon is really able, I mean, look at this. This is what I do like, Mo. Their price to sales ratio is 2.7. So guys, the reason I talk about price to sales is it's a good way of comparing companies. Pull up Walmart real quick. Actually, I'll pull up Walmart while you do your thing. So let's see what Walmart's price to sales ratio is. 0.7. So 2.7 versus 0.7, 4 times more. But Walmart doesn't have AWS.
You're right.
Walmart doesn't have Prime Video. They don't have how many people selling on Amazon. The people are selling on Walmart.
Yeah, they
Third
are.
party. You can buy a Patek Philippe on Walmart.
Yeah, it's pretty cool.
So I get that. But at some point, is even 2.7, if you assume all these different businesses combined together, is 2.7 times sales a reasonable sales a multiple? I don't know. This is why it's hard.
They're kind of in a league of their own.
Oh, 100%. I agree with you completely.
It's hard to make any comparisons to them.
When I was listening to the book, and now granted I'm in a different bracket income-wise, and you are too, when he said the price of Amazon Prime, I was like, oh, that's the price now? I had no idea.
What is it?
Well, I think he said 129 or 139. See, and to us, it's like, I just want the convenience of Amazon. That's all I care about. And I use it every single day. In fact, I will pay sometimes a $3 charge to get something next day when 2 day is or 3 day is free.
I just add more stuff.
See, but you're spending more. But to me, I'd rather spend $3 extra than buy something I don't need.
Yeah.
Now, granted, I should just buy like toiletries.
So that's what I have. I have a separate list that's for like home items that you need. And whenever I'm like, I'm low on something, I just add it in there.
And even
paper towels or whatever.
Yeah.
Yeah.
All right. Great comments. So Mo, who gets the
So I think it should be D Money or Chris AH. What do you think?
Yeah, you pick, man.
Did we give Chris something already?
I wonder if we have.
I think we have.
But boy, I'm gonna feel bad if we haven't.
Me too. I'm going D Money.
Go D Money. All right, D Money. Congratulations, Chris. If we haven't given you anything yet, reach out to us and we'll still match it.
And you comment like crazy.
So yeah, and you comment. So keep the commenting going, guys. The community members are doing a great job commenting, and I think this conversation should be re-engaged once this video comes out. And a lot of our viewers, a lot of our subscribers watch our videos and belong to the community. So please continue to engage in the chat about this.
Even if you don't want to buy Amazon, this is a great one. It's a great case study.
100%.
This is a good thing for people to talk about.
So let's look at the 8 pillars here.
They're a little rough.
And guys, if you're part of our community, you can customize the pillars to 12 different pillars. I mean, it's a lot. The check marks are net income growth and revenue growth. This cash flow I'm not worried about because they really increased their capital expenditures in the last year. Guys, I remember the first time I saw an Amazon truck. I was like, holy cow. Now I don't drive home without seeing 5 of them.
Yeah.
Now it also helps that I pass a big warehouse on the way home, but I do see them all the time.
You see them everywhere.
Everywhere. In your neighborhood, you see. Remember, the mailman was once a day. Amazon trucks come in my neighborhood.
It's amazing how many times on my Ring camera do I get 2 o'clock in the morning, 3 o'clock in the morning a delivery.
Oh, really?
Oh, yeah.
Here's the interesting part. I am building a little small. So we're gonna have gates to our new house, right?
Yeah.
I'm building a secure box area so that Amazon can put the boxes in there.
Right.
I am literally going to spend thousands of dollars to have a box for Amazon to put my packages in there. That's how important Amazon is to me.
Yeah.
Like I don't even care if the other packages never. Like if I order something from somebody else, Dick's Sporting Goods, and they say, "Hey, we missed you," fine. But the Amazon stuff, I want to make sure I get it. That's stickiness. Let's look at analyst estimates. All right, guys, they're expecting Amazon to make $225 a year, $225 per share this year. Going up to $6.04 in 2027. Big time growth. So they're going to start showing the profit, Mo?
Probably not.
I don't know.
Look at this revenue growth.
Revenue growth, $580 billion to $887 billion, double digit.
Wow.
All right. So guys, what's the price to pay for Amazon? Guys, if you want to learn more about the community, joining the YouTube's largest value investor community, click this little video above. It's so short. It's awesome. You'll really enjoy it. Let's check out Amazon. So, when was the last time I did Amazon? Because I'm going to change it up a little bit.
Mine was like August 3rd.
Mine was August 7th.
Okay, that was probably what it was.
Okay.
Let's see.
Oh, actually, I like these assumptions.
Let me see. What do you have?
So for revenue growth, I did low of 6%, middle of 10%, and a high of 14%.
Okay, I did 5, 7, and 9.
By the way, this is big.
It's huge.
14% is big. For 10 years, let me show you guys how big that is. What did they do this year?
586, was it? 538.
That would take them over $2 trillion in revenue in 10 years. That's a big number, guys. Big number. Now, profit margin. Keep in mind here, the last 10 years, they've done 3.3, then 3.9 in the last 5, and 2.4 in the last year. I'm changing this to 4, 7, and 10. I'm making my middle case 7. Middle. I'm going to go one step further. I'm going to change this 4, 8, and 12. Same with free cash flow. And look at free cash flow has been even worse because they keep reinvesting, and I'm okay with that. Good job. Now, PE. Current PE is 112. Current price of free cash flow is 456. I don't care. Guys, at the end of the day, we're trying to determine the PE 10 years from now at the end of your analysis, which you can do 1 to 20 years. So what do I think the PE of Amazon will be in 10 years? Of course, this is all a big guess. Everything we do here is a guess. We like to start at 15, the market average, and go up for moat and ROIC and revenue growth and down for the opposite. I don't think the revenue growth is going to be potential is going to be as high 10 years from now because they're going to be huge.
All right.
But I think the moat will be absolutely ginormous 10 years from now. And the profit will probably be higher, of course, than it is today. Mo, what'd you put?
So revenue growth, I did 5, 7, and 9.
Yep.
Profit margin, I did 2, 5, and 7.
Okay.
Free cash flow, 2, 5, and 7. PE, 17, 20, 23. Same thing for price to free cash flow. And for my return, 11, 13, 15.
So I did PE and price to free cash flow of 17, 20, and 23 as well. My desired return, I did 12, 14, and 16. Because I still think revenue growth of 6% is going to be hard. That's basically doubling in the next 10 years.
Yeah.
But
if there's any company that can do it,
currently online sales is what percent of total retail sales?
In the world?
Is online sales as a percent of total retail sales? 14.8% of retail sales are online in the US. So guys, there's still a big market to go there. A lot of market to go there. So maybe the 6% is not unreasonable. Maybe it's more like 10%. I still want my higher desired return. As we go higher assumptions, we need that bigger margin of safety, 12, 14, 16. So guys, really quick, there's only 1 or 2 minutes left. Just stick with me throughout because we're trying to teach a process here, not just tell you what to buy and when to buy it. This is about teaching a process so you can apply it to yourself. Even if you don't agree with me on Amazon, you can still take the principles we've talked about to apply it to your own analysis when you join our community. So I'm gonna hit the analyze button. Mm-hmm. The stock's currently at 142. I have a low price of 35, a high price of 170, a middle price of 89. Current price, if you pay the current price and the low assumptions occur, you'll lose about 5% a year. Middle assumptions occur, you'll make about 7.8. High assumptions occur, 18.5. Mo, what'd you get?
Mine are a little crazy. 17 on the low, 73 on the high, 47 in the middle. And I just changed on my watch list to be at $75.
I'm gonna add to my watch list at 75 as well because I want to be able to sell puts at lower prices. Guys, thanks very much. I hope you learned a lot. Talk to you later.